So at 6,500, Miss April, is the market already cheap?
Last week, we already talked about how the market was cheap at 15 times. Actually, if you look at the past 5 years, we've only traded at 15 times PE once.
Once. In the past
And
5
now
years.
it's lower than 15 times.
Okay.
So from that context, it looks cheap. Cheap enough for a long-term investor.
Okay.
That's what I'd like to say. I mean, I think the context of people who were saying, the world's worst performing stock market is not cheap enough is because, well, the reason why it's cheap is because there are problems. And they're saying the problems aren't over yet. That's why it's not gonna go up yet. And to that extent, yes, I do agree. There is a chance that, we could still go down. But then again, nobody knows when and where we'll see the bottom. So, from a long-term perspective, these occurrences are quite rare, and I think these are good opportunities for long-term investors.
Okay.
Yes.
And when we talk about cheap, April, how cheap is cheap?
Yeah, I think so. Right now, we already talked about 15 times being cheap. For those who are a little bit skeptical about 15 times. I just like to point out, maybe in the past, a 15 times PE doesn't look cheap because our index before was heavily weighted towards the likes of PLDT, which of course would trade at a lower PE, but right now, the heaviest index component would be SM Prime, and those stocks trade at 20-something times PE, 30 times PE. But I think what is more useful is to look at the components of the index. So initially we were looking at the 30 components. And if you look at the 30 components, 21 of them are actually trading below the 10-year historical average. Okay. If you look at actually the whole universe that we cover, which is a universe of 60-something stocks, 80% are trading below the mean, whereas 50% are already hitting one standard deviation below the mean. Meaning, during the past 10 years, they traded at higher valuations 84% of the time, which gives you a good probability that you'll see something better going forward.
What sectors look cheap? Really cheap?
Oh, the banks, definitely. The banks look really cheap. I mean, they've been sold off, and for a good reason. Because again, it's really just the perfect timing that now they're having high levels of loans to deposit ratios, meaning out of the total deposits they have, they've almost lent out everything. So now, to continue growing their lending portfolio, they would have to pay more to depositors. And earlier this year, we had the central bank cutting the reserve requirements. But, the BSP has said, okay, since our inflation is high, we're not going to cut our reserve requirements anymore. So I guess, those factors are creating concerns among investors of margin squeeze. Secondly, with rising rates, they could suffer from trading losses, But that said, the way that banks have been sold off, we actually have a couple of banks that are already trading below book value, which means that, after selling all the assets they have, paying off all the liabilities, the stock market is worth less pa, or you get more when you do that versus what the market is pricing it at. So, that said, I think the sell-off is a little bit too much. I'm not too concerned about significant increases in non-performing loans because I'm not seeing bubbles similar to the Asian financial crisis. So, yeah, maybe a little bit increase in the NPLs, but not to the level of Asian financial crisis. And banks are so much stronger today because they have NPL covers of more than 100% already because they've set aside a lot of provisions in the past. So, I think, you know, when rates do go down, because inflation goes down, then these banks will actually reverse, which is why you know, I'm not that bearish on them, despite the fact that they've gone down a lot. The demand for loans is really very strong. And remember, if inflation does go down, the Bangko Sentral has committed to cut reserve requirements again. So yeah, they'll have some problems in the short term, but it's a short term problem. It's not a long term problem.